Good morning, traders, and happy CPI day. As most of you already probably noticed, it is 8:02 a.m. Chicago time on Thursday, the 10th of November, 2022. Thanks for showing up today for the 2355th episode of the Morning Pre-Market Trader Bite. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. What have we got? What have we got? My God, this thing moved. All right. So we went from, I think it was mild risk off to strong risk on sentiment. Today is shown here in the Convergent Trading pre-market summary sheet. This sheet's a part of our prep and outlook for the day. Very important part of preparation. The main event, of course, this morning is the U.S. CPI was released, and it came in much, much lower than expected. The CPI, the inflation rate year on year, clocked in at 7.7% versus the expectation of 8, the prior of 8.2. That is a huge swing of 50 basis points in a month. Core inflation came in at 6.3. The expectation is 6.5. The prior 6.6. That's relatively significant. The month-on-month inflation rate came in at 0.4% versus 0.6 expected. The prior 0.4. And core inflation dropped from 0.6 to 0.3 in the month of October. Initial claims came in strong, 225 versus 231. But really, this is all about inflation. We have a slew of Fed speakers you see here, 9 o'clock, 9:35, Mester's at 12:30, and then Fed's George is at 1:30, and then we have Fed's Williams at 6:35 p.m. Eastern U.S. time, Standard Time. And that's really it. That's the main piece. The market spiked. The S&P moved 102 points in one print. 102 points in one print, in one move this morning. Just a tremendous amount of activity there. It looked like my platform had bids and offers at prices going all the way up. We seem to have triggered a volatility stop on the CME. We still have the midterm elections. The other news, less relevant news this morning, the midterm election results are still unknown. We still have races, especially for the House, where Republicans are expected to take. They were initially expected to take about 29 seats, 30 seats, and it looks like they're only going to take 5 or 6. But those races are still outstanding, and we won't know who will be in control of the House, where the money matters are decided. So that's important to the market. That's not going to be decided for days or weeks. The crypto turmoil continues. FTX. It came out that FTX had some real debt, some real financial issues. The guy, Sam Bankman-Fried, went from being a multi-billionaire to probably having to file for bankruptcy in the span of about 24 hours. But no, let's not regulate crypto. Let's not decide on checks and balances and audits in crypto at all. That's a smart thing there. So in any case, FTX asked Binance to come in and bail it out. Binance looked at the books. They found a lot of debt. They called the deal off. And so there you have it. A lot of markets have moved in sympathy with crypto. It is a significant piece of the financial puzzle. So I own crypto. I don't write it off. But still, the way it is run and managed, it's just a wild, wild west, and this is a consequence of that. China COVID outbreak, we're still getting some news on that. There's a reopening risk. And then Russia announced yesterday that it will pull out of Kherson. which will de-escalate the Ukraine-Russia conflict into the winter. So we're expecting a pause in the conflict there, which is somewhat bullish. As far as earnings, really the big player, AstraZeneca, came out this morning. U.S. Foods after the close. There are several of them, but nothing really market-moving, market-shattering. Looking at the S&P, the S&P went from a balanced profile to a multi-distribution. We'll look at that in a minute. And 415,000 contracts traded, much higher than what we would consider to be normal. And the inventory is now 99% long on 131 points of range, which was like 2 trending weeks worth of range in the past, all covered within less than a few seconds this morning. The point of control is much higher at 38.75, and it looks like we're running towards the swing high of what was it, 39.25-ish, something like that. This is what's likely. This is what it's looking like. It is heading to. So that's where we are. One of the things I wanted to share with you this morning is the Fed Watch tool, the Fed funds rates, and how they are moving. And what we have is the next Fed meeting, which is December 14th. They're pricing in only a 50 basis point increase with a probability of 80%. So this has moved quite a bit. So now we're going from 75 basis point increases to now easing off to 50 basis point increases. And we know that Evans talked about this earlier in the week and caused a little pop. Actually, last week caused a little bit of a pop. And so now, we're kind of easing off a little bit. And the CPI heavily supports that. So that's where we stand with that. Let's take a look at the S&P. But first, I want to remind you, today is voting day. Please take a moment to vote on the event contracts. Things have changed dramatically. In fact, all of my homework has gone out the window this morning, and I did expect it. But please take a minute, go to eclear.me/event-voting. I want to see, as I check this tool here, I want to see your votes come in. And what you're voting on is whether or not we settle above yesterday's settlement. And the answer is kind of obvious. I can guess which way you're voting. And it's going to be difficult putting these event contracts on this morning because we've gone a long way already. So, yesterday's settlements, I'll show you in a minute, but take a moment to vote. Your vote matters. Your prediction matters. I can guess what it'll be given the news, so it's kind of throwing a wrench in things, but I do want you to participate in this Polling for Charity program. All the proceeds go to St. Jude Children's Hospital, and they're not coming out of you. You're not paying. EdgeClear is. So, and the markets if we make money. Let's take a look at what we have in terms of what has happened so far. Check it out. Yesterday, really expected a balanced day, expected it to kind of sit sideways most of the session, and it did. And then it really started to sell off. Again, continuation of the crypto movement and influence, just liquidation across the board. Really nice break of breakdown from balance here. And we ended up finishing near the lows, multi-distribution, really a trend profile. We've reached double IB low, and we closed down at the bottom. And since then, it has been a completely, skewed up, a completely balanced profile this morning until we dropped right after the event this morning and shot up 102 points. You could see it right here. in the rotations, it says 102.75 points in one move, making everything else look really small. And then since then, we have bounced a little bit, pulled back. What I've noticed is that the market is really playing these major option strikes a lot. So you had a lot of volume go off at 38.50, huge volume at the 38.50. Look at this baby. Look at this massive iceberg right here. Look at how it's shaped. Very odd shaped profile right there. And then when it got to 75, it also shut the door, and you can see heavy volume up there. In fact, we shifted the overnight point of control to 75 as a result. Down below, we almost got to the 25, which had some large bids in it, and now we're continuing to push higher. So as we look at the big picture here, we are way above the Fed balance. I mean, the immediate move on the CPI release brought us back 100 points higher on the nose to the Fed, the FOMC SOC, to the FOMC price that was last traded before the decision was announced last month or earlier this month. So we came right back to that, and then we started to kind of push through and push higher. We're up here now. So we're in the upper excess of FOMC day, and we're in this upper balance area, upper distribution, and it's really hard to decide or predict or try to project what is expected going into today. So I'm going to just kind of wash my hands off of it and not pretend like I know more than I actually do by saying that the market has definitely responded very, very favorably to this CPI release, and it's as opposed to what it was creating, which is a push to, as we talked about, a push to the 47.50, and then we expect it to pull back. Expect it to pull back to the lower balance. Let's go to a different chart so we can see what's going on here. We expected it to push up, which it did the other day. We expect it to now move, round up a top here and have a swing high, which it did successfully, to come right back to this lower balance down here that we had from a few days ago, 37.40. And then to come right back into this lower balance here. And it's refuting all that on a news-based event. The trick with news-based events is this. The news itself creates an interruption in the auction. This is why we have the scene of the crime, or the price at which the auction last traded before the news came in and interjected in the auction. But oftentimes the market digests that news and ends up coming right back to the scene of the crime, just like an arsonist would, light a fire, run away, and then come back and watch the scene of the crime that you're a part of. This is why we call it the scene of the crime. It comes from just old Matlock show or something. But we generally come back to the scene of the crime, and that scene of the crime is 37.65. 37.65 is where we jettisoned out of on the CPI release, and we're way higher. So it's not likely to come back to the SOC. We're in the upper distribution. We took out most of we took out the Fed's balance down at in that 68 down to about 38.30 range, with 47.50 being the point of control of that range. We took that out, and we're above at 38.82. So now it is very likely to just drift sideways with an upward skew into the session. So this is my expectation coming into today as we switch. Let's look at the relative delta. Pretty insane delta here with this movement. And you could see it's dominated by large and very large lots, with small lots going the other way. Very unusual. Nothing is kind of congruent here. And it just seems to me like we are likely to just grind our way into balance today. We're in the upper balance, the upper edge of the upper balance. And to me, it's very hard to see what it's likely to do. So what do I do then? I look for how it behaves on the open. So what do we do on the open? Do we become responsive because we're opening in a large gap up above yesterday's range? The most recent auction is yesterday. We closed yesterday very weak, and we're opening on the opposite side plus a gap. So the question is, are these prices high enough for sellers to come in and take advantage and beat them down, right? So the morning, it's very important this morning that you not trade the open. I don't advise trading the open, but it's very important this morning to sit at your desk and watch to see how the sellers respond. If the sellers are aggressive, like we get an open drive or an open test drive lower, then you're looking for the key target below is going to be 38.50. That's our line in the sand. That's this price right here with all these dots on it. That's the most important price so far. So I'm looking for it to respond back to this 38.50. And then if it does, I'm expecting it to balance into the end of the session. If sellers don't step in immediately and take this down, as in prices are just really, really high and it's advantageous to just offer these prices and sell them, then it is very likely to chop around on an open auction with a wide range on the open. And then we have a gap and go situation. And now we're starting to look at key resistance to 39.02. And then we're looking at 30. So what are the numbers above? 39.02. And then above there, 39.25 become the key targets above. So I'm not going to draw some squiggly lines on here because what we have here is extremely unusual, but I'm warning you that it is important not to trade at the open. There's going to be higher time frame traders, the OTF, other time frame traders or high time frame traders who are going to come in on the open and take positions based on where we are and based on the CPI. We don't want to be a part of that. So we want to see how it responds on the open. Let them smack each other around. And once the fight calms down enough that we can throw a punch, we'll throw our punch. But we're going to do that after the market decides what side it wants to be on. And that may mean that it might open and just run away. But even if it runs away, there are counter rotations that we can trade off of with measured risk and so on. So I'll leave you with that. I do want to make sure that you are part of the voting process here for these event contracts. I do want your prediction on what you think the outcome is going to be. Just for your participation, it looks like a whole bunch of you voted yes, yes. Will the market close above settlement? These settlement prices from yesterday. Yes for the ES, yes for the NQ, yes for the RTY, yes for crude, and yes for 6E. That was a tough one, wasn't it? So my job now is to go through these event contracts and figure out what is advantageous. So we could see the 3900 strike now is trading for $8.75. That may give us a 2-to-1 return or a 1-to-1 return if we take it. But this is charity money here. I'm not going to throw it away if I don't see an advantageous position that meets our rules. And our rules are on EdgeClear's website for this strategy of using these event contracts. If it doesn't meet our rules, we're going to be professional about it. We're not going to take the trades. But I appreciate you voting. And thanks for participating. And be watchful today. It's a good learning day. You don't have to throw your money in the ring right away. So just chill, let the market decide what it wants to do, and then jump in afterwards. We'll put these positions on. If we do, we will report the results back. Thanks for tuning in, and I'll catch you tomorrow morning. Take care.
Bank and Treats. Financials high. Financials high. New high text.